So with that piece on investing, I move on to trading. Trading is short-term investing in essence. It's the idea that you hold certain securities at a very short amount of time and letting them go very quickly. So trading is a different sort of lifestyle all on its own. Trading involves certain risks that are very real. They also involve a lot of capital, meaning financial capital, as you go into trading from time to time. So, as with anything, without risk, there is no reward. With trading, the risk is somewhat amplified, but only to a certain extent, because that is limited by the number of trades you do, the number of funds you're willing to commit, and other external factors. So, how to become a successful trader? How to get ahead or do well in the world of trading? Okay. So, first, what is trading? So, trading is a short-term hold of securities. Could be assets, could be stocks, bonds, whatever. If it's tradable, you can trade it. So, there will be active markets in different places for them, and you should be able to kind of identify where and what and the kinds of markets that actually interest you. So trading and investing. Investing is you hold for a while until something actually yields. So in essence, investing is only one-sided, meaning you're buying something with the hope that it's going to yield a decent return sometime in the future. Whereas with trading, you're holding it for a certain amount of time, a certain period of time, expecting a move, and if it doesn't move, you get out of that position. So for example, if you think the stock of a company, for example Halliburton, is going to go from $25 to $40 in a matter of 3 weeks, then you buy it today when it's 28, and then you put a sell order in later on, whenever that is, around a 3 or 4 week time frame, when it goes to 40. If it doesn't, you get out, and hopefully you have gains regardless of where the stock price is. Now, also trading, it's not for everyone because of the short-term nature of it, and also people often associate it with high-risk gambling behavior when it really isn't. It's a quick flipping of a holding or a position. People do it for real estate. People buy a house, in January and flip it in April when the housing market is back up. There's no difference to that to trading. Trading is just much easier, much more liquid, and of course you are subjected to a global type of audience and range of participants. So, as mentioned here, typical holds of positions are between hours to weeks. Here at Equity Sense, we normally trade. The longest we usually trade during the day is probably a 12-hour hold on a position. We are primarily day traders, so I finish sometimes trading between 6 to 12 minutes on a very, very good day. On a very slow day, probably 3 or 4 hours. So depending on where you are and what your targets are. So, if you're wondering, okay, I've learned how to invest, or maybe you haven't learned how to invest but you want to know how to trade, you want to get started. So, how to get started on trading? You get the right education. That kind of speaks with everything else. Get the right training. You got to get trained by the people who actually know what they're doing, who actually are active traders. Investors are good at holding, but traders are good at both investing and trading, meaning holding quickly and holding long. So it's not easy for an investor to automatically jump into a trader's seat and do trading, because investing involves a certain type of attitude and as well as expectation, whereas trading is more methodical, more systematic, more mechanical. So it involves quick thinking and to be always on your feet when you're in a position. So get the right education, read the books on trading, but they provide the necessary theoretical background, but not complete course in knowing how to trade, get an experienced mentor. There are a lot out there who are very reputable, who actually know what they're doing, and you need to be able to find them, seek them out, and actually learn from them, because then you can learn from their mistakes so that you won't make the same mistakes, because those mistakes are very costly. At the same time, you got to be careful from those people who advertise themselves as really good traders when they probably don't. And normally a good trader can easily spot somebody who's just full of BS really easily. So you'll be able to do that, but for somebody who's still into this new, it's going to be a little bit challenging. But if you know somebody who actually knows how to trade, ask them who their mentors or who their previous mentor was, and you could perhaps try to get that training from that person. So again, trading is like the active, practical side of investing, whereas investing is seen as passive, where you buy at the lows and you hold later on because you're expecting 10, 20 years down the road it's going to be really high. Whereas trading, you're buying now, expect it in the next few days, few hours, few weeks to be higher than where it is. So that's why it's extremely important that this is, to understand that this is a discipline all on its own. So finding your market, okay? So learn the markets that interest you and pick your niche, your niche, however people pronounce that. So learning your markets, very important, because there are different types of markets in the world. There are stocks, options, futures, forex. You gotta find the market that speaks to you, speaks to your lifestyle, speaks to your your schedule and everything. For most people who have full-time jobs, they prefer the forex and the commodities market because they're open 24 hours. For those who are allowed to trade or use external software at work, they're okay to do day trading or trading during market hours between 9:30 to 4 p.m. Eastern. So you got to be able to find the market that interests you and then stick to that. Master that market, know what makes that market move, and know everything about it. That will make it easier for you to jump on opportunities when they present themselves and get out when things are looking really badly. So financing. So after you've trained up, after you've found the markets that interest you, and you've done a lot of the demo and practicing that you need, and you're ready to do trading, you need to understand that you need to have capital. You need to make money. You need to have enough money to make money. That's expected. So understanding your financial capabilities and limits will help you gauge how much risk you are willing to take in trading. Because trading involves a lot of quick decisions, you need to be a very quick thinker. Okay, so you need to exercise good financial discipline. That's extremely important. If you can't handle your finances very well, probably not a good idea to be a trader at this point. So extremely important, you need to be able to master financial management and know how to manage your money very carefully. So an example here, this is Lululemon. So just looking at how it was and what it looked like. So this was just recent. This was taken May 6th, 7th, and 8th. So May 8th, 2013. And this is just part of the service that we provide here at Equity Sense, where we identify high probability trades. So we alerted clients, okay, it seems like Lulu is about to move. Probably a good idea soon to kind of buy some shares or buy some options that bet on bullishness for a probable move. So we initially thought from 74 to 76 that was a good move. We predicted about $1, $2 move, and that was great. People who jumped in and got out made $2 per share. That's pretty good. If you're buying 100 shares, you made $200. Pretty easy in just 1 day, 2 days waiting. Obviously, we had a bigger move the day after the 8th, and that was really, really significant, where it moved $6. And here, again, if you were a trader and if you bought at 74.75, you would have made $400 per 100 shares that you own on Lululemon. Again, very, very quick trade. So for people who jumped in on this, would have made a lot of money extremely very quickly. And that's what appeals a lot of people to trading, because you can easily make day-to-day gains just, looking at the right places and being able to master your own sectors, your own market. And that's really important for people who want to be able to add some extra cash to their monthly, savings accounts or checking accounts. And again, who can't say no? Who says no to extra cash, right? So that's what trading entails. You need to be able to master your own location or your own space. So in a way, it does require for any person to go into this trading world to be more proactive, to be able to seek out what moves their securities, their stocks, their forex, their future, whatever asset class you like. You need to be able to kind of do some research, an hour a day or so, just to see where things are going and know from there. Because that's where here at Equity Sense we try to trim that research time down for our clients, because we identify the moves that are about to be made, and then people can kind of be able to make money off of that. And this one, we spent some time researching it. We alerted our clients. Some of them actually were able to jump in, made money. Most of the alerts that we put out, we do jump in as well, because we like the setups. This one is a really good setup, really easy setup, and it was very, very, very easy. I mean, if you were in a derivatives area on this, I'm talking about stock options. The $75 contract, okay, and what's called a stock option, was trading for about $1.20 per contract before this move happened. So just by simplifying the idea here, okay, it would have cost you $1,200 to buy a contract for 10 contracts, and after this $4 move, you would have made $3,000 or $4,000. So that's where the power of derivatives come in. And most of the time, we are options traders. We sometimes still dabble into buying shares, but we like to trade options because they're much faster, much cheaper, and we kind of manage our risk much, much easier that way. So it's really important that you understand how this works in terms of your day trades and where things are going to go daily, on a daily basis. So that's a very good example. This is very recent, very good example of how trading literally can enhance your financial capabilities. Even if you are not a super active trader, you just want to be able to get some money out of the markets. Again, with this, say you spend $120 for one option contract, or 100 shares, so $7,500 for 100 shares. You get out later, you make $300. Not bad, not really bad. That's $300 extra in your pocket just for looking at how things are going and where things are going to go. So trading benefits, in summary, it is a lifestyle all on its own. You probably have heard of people who have been talking that they're day traders now and whatnot. So definitely requires you to understand yourself, your self-worth, your emotional controls and emotional capabilities, and of course your mental discipline, because no one is telling you how much you're going to go in, how much you're going to get out of that. You have to be a very good controller of yourself in terms of profiting. So it requires for you to understand yourself. But the great thing is you can add extra cash. Again, the market will only give you how much you want to get out of it, and of course the market will take everything from you if you let it do so. As myself, from Equity Sense, I am a pure full-time day trader, full-time trader. So I do this for a living. I've since quit my job, and I do this for a living. It's giving me financial independence, because with the advent of electronic trading, I can trade using my iPhone wherever I am in the world. I travel most of the time every year, so I can trade wherever I want, make my quota every day, every week. And again, I can't be any happier because I don't have to report to anyone. I am my own boss. And of course, for those people who like to still have a job, the safety and security of a job while trading, again, you can do so. Again, it's just extra cash you can get. If you make enough money every month, that's your mortgage already into your free from your trades. So with $5,000, $10,000 in your trading accounts, you can easily make $100, $200 in a day. So again, you translate that with 20 business days in a month, that's about $2,000 to $3,000. Again, that is your mortgage that you can is mortgage money you can use, and or do whatever with it, pay other loans or whatever. So it's extra cash for just being able to be smart, being able to be quick, and getting the right information. So that's what attracts a lot of people to trading, because it's much easier in a way that you get quick gains. But also it's challenging because a lot of people underestimate the demands, the physical, the emotional, and the mental demands of trading. And that's where a lot of traders do fail in terms of managing their positions, because they fall in love with positions, they fall in love with trades, they fall in love with companies or securities, and they don't want to let go. Then that's the problem. That's where the investor mentality ruins a trader's mentality. So that's why a trader can easily be an investor, but an investor has to take that extra step to be a trader, because it's a big mental shift from being an investor into a trader. Now, I've been doing this for the last 8 years, and I've been doing very well. Paid off my student loans on it, paid off a lot of the things that I need to pay off on it. So again, trading, regardless of your financial background, educational background, financial net worth right now, you can trade as long as you get the right education to know how to trade and the right training in this, and you'll be able to. So hopefully this has been able to shed some light on what trading is all about, how it can give you a bit more money in your pockets. And the wonderful thing about this too is that it doesn't matter if you're young or old, but obviously the greatest chance for you to make a lot of money is when you're in your 20s or 30s, because you have a lot of time to make up for unfortunate losses. Trading will always involve losses, such as investing will always have some losses of some kind. Trading will have some losses, but if you're young in your 20s or 30s, you have enough time to cover your losses if ever your losses continue or get worse. So that's where trading can be very helpful in terms of enhancing your lifestyle, enhancing your financial worth, and of course giving you the kind of life you've always wanted, and that is getting out of the rat race and living the life that is very comfortable and not have to worry about waking up at 6 in the morning and going to work reporting for some schmuck who probably doesn't appreciate you anyway.